tax slabs to a higher tax deducted at source. The start of the new financial year means we're looking at a slew of tax changes coming into effect. CNBC-TV18's Timsy Jaipuria has the most important ones we should be watching out for. Timsy, if you could take us through the top 5 changes.
So a lot of these changes were announced in the recent months, but the most important ones were part of the income tax revisions and introduced by the Finance Minister Nirmala Sitharaman in her February Union Budget. Given that the finance bill has been passed by the Parliament, so these provisions take effect from 1st of April. Here are the top 5. Starting the 1st of April, key income tax changes aimed at providing relief to individuals and senior citizens come into effect. The revised tax slabs under the new regime increase the basic exemption limit to 4 lakh rupees, while income up to 12.75 lakh rupees per annum effectively is tax-free for salaried individuals. That is when you factor in a standard deduction of 75,000 rupees. According to the government, the new tax slabs are likely to help individuals save 1.10 lakh rupees annually. Second, relief for senior citizens. The TDS threshold on interest income from banks, cooperative societies and post office deposits has been raised from 50,000 rupees to 1 lakh rupees. So this means there will be less tax deducted at source. At the number 3, we have TDS thresholds on house rent. Budget 2025 increased the threshold limit to deduct TDS on house rent paid by non-individuals and companies. Now the TDS on house rent paid has to be deducted from the rent itself if the rent payment is 50,000 rupees per month or more. Number 4, taxpayers can now designate 2 properties as self-occupied without requiring justification for non-occupation. These reforms are aimed to reduce tax burden and enhance financial flexibility. At the 5th, we have changes to the limits of the TCS. Now, the limit of TCS on foreign travel investments and other large transactions has been increased from 7 lakh rupees to 10 lakh rupees. But there are a number of smaller changes that individual taxpayers and investors should keep in mind. Like starting today, if an investor has not linked their PAN with Aadhaar, then dividend payouts to them will be suspended. Another change is that in case of non-linkage, TDS will also be increased and no credit will be given in Form 26AS. Another operational change, and this one is for UPI users. If your mobile number is linked to UPI and you have not been using it for a long time, you have to update it. Otherwise, your UPI account linked with the number will not be accessible. So quite a few things for us all to keep in mind as the new financial year begins.
So the new changes you have to keep in mind. Thank you so much for Timsy for those details. Now, Ayurvedic beauty